The news that China has sold 68% of its U.S. Treasury holdings is a significant geopolitical and economic event with far-reaching consequences. This development has potential implications for global financial markets, the U.S. economy, and international relations, particularly concerning the West and NATO. This analysis will explore these implications in depth, considering various angles including economic, political, and strategic aspects. China has been one of the largest foreign holders of U.S. Treasury securities for many years. These securities, which include Treasury bonds, notes, and bills, are debt instruments issued by the U.S. Department of the Treasury to finance government spending. Foreign governments, including China, purchase these securities as a way to invest their foreign exchange reserves and to stabilize their own currencies. China has been one of the largest foreign holders of U.S. Treasury securities for many years. These securities, which include Treasury bonds, notes, and bills, are debt instruments issued by the U.S. Department of the Treasury to finance government spending. Foreign governments, including China, purchase these securities as a way to invest their foreign exchange reserves and to stabilize their own currencies. Recently, there have been indications that China has been reducing its holdings of U.S. Treasuries. This trend has been attributed to various factors, including the need to manage its own economic slowdown, diversification of its reserves, and geopolitical tensions with the United States. Economic implications. Impact on U.S. interest rates. One immediate consequence of China selling a significant portion of its U.S. Treasury holdings could be an increase in U.S. interest rates. Treasury securities are a key benchmark for global interest rates. If a major holder like China sells a large quantity of treasuries, it could lead to an oversupply in the market, pushing down prices and driving up yields or interest rates. Higher interest rates can have several downstream effects. Increased borrowing costs. For consumers and businesses in the U.S., higher interest rates mean higher borrowing costs for mortgages, loans, and credit. This can lead to reduced spending and investment, potentially slowing down economic growth. Government debt servicing. The U.S. government would face higher costs to service its existing debt, which could lead to increased budget deficits or cuts in government spending. The sale of U.S. Treasuries by China could also put downward pressure on the U.S. dollar. If China converts the proceeds from the sale into other currencies, it could lead to a depreciation of the dollar. A weaker dollar has mixed implications: exports and imports. A weaker dollar can make U.S. exports cheaper and more competitive abroad, potentially boosting the U.S. trade balance. However, it also makes imports more expensive, contributing to inflation. Foreign investment. A decline in the dollar could make U.S. assets less attractive to foreign investors, potentially leading to reduced capital inflows. Global financial markets. The sale of a large portion of U.S. Treasuries by China could also create, volatility in global financial markets. Investors may interpret this move as a sign of deteriorating U.S. China relations or broader economic instability. This could lead to increased market uncertainty and volatility, with investors seeking safer assets or diversifying their portfolios. Political implications. U.S. China Relations. The decision by China to sell a large portion of its U.S. Treasury holdings could be seen as a strategic move in the broader context of U.S. China relations. This action may be interpreted as a signal of China's discontent with U.S. policies or a way to exert economic pressure on the U.S. Geopolitical strategy. China's move could also be viewed through the lens of its long-term geopolitical strategy. Reducing its dependence on U.S. assets may be part of a broader effort to insulate its economy from potential U.S. sanctions or financial pressures, especially amid ongoing trade tensions and strategic rivalry. Implications for NATO. The impact of China's actions extends beyond the U.S. to its allies in NATO. Higher U.S. interest rates and potential economic instability could have ripple effects on the economies of NATO member states. Additionally, if China's actions are perceived as part of a broader strategy to weaken Western economic influence, it could lead to increased tensions and strategic recalibrations within NATO. Strategic implications. Diversification of reserves. China's sale of United States Treasuries is likely part of a broader strategy to diversify its foreign exchange reserves. By investing in a wider range of assets, including gold, other currencies, and strategic investments in infrastructure and technology, China aims to reduce its financial vulnerability and enhance its economic security. Bilateral and multilateral relations. China may also be seeking to strengthen its economic and financial ties with other countries as part of its Belt and Road Initiative, or BRI, and other strategic initiatives. By reducing its holdings of United States Treasuries, China frees up resources that can be used for investments in developing countries, enhancing its influence and fostering economic dependencies. Conclusion. The sale of 68% of China's United States Treasury holdings is a multifaceted event with significant economic, political, and strategic implications. For the United States, this move could lead to higher interest rates, a weaker dollar, and increased market volatility. Politically, it reflects the ongoing tensions between the United States and China and may be part of a broader strategic realignment by China. The repercussions for NATO and the global financial system underscore the interconnectedness of global economies and the far-reaching impact of major geopolitical shifts. This analysis has provided an overview of the potential consequences of China's actions, highlighting the complexity and interdependence of modern global financial and political systems. Further developments and responses from the United States and its allies will be crucial in shaping the ultimate impact of this significant event.